today has offered plans for addressing the important deadlines they will face within the first year of the next term. Maya, I'm pleased to say, is with us now. Maya, great to catch up with you. Can we start there? The important deadlines that they will have to face, whoever it is, within the next 12 months.
Yeah, 2025 is going to be an absolutely crucial year when it comes to fiscal policy. So as soon as we're swearing in the next president, the debt ceiling is going to be on. It's going to be returning. So that will start in January, but we will.
Every Thursday in June at noon Eastern Time. Bloomberg Equality.
Struggle in the past, opportunity to save a lot of money, opportunity to add a lot of debt. We've seen both. But they also have the huge expiration of the tax cuts and extending those, which is something both candidates have said they want to do in one form or another, could cost upwards of $4, even $5 trillion. You may see people trying to expand them. We've heard about that as well. We also have the end of the spending caps that were part of the Fiscal Responsibility Act. And so we'll have to figure out what we're doing there. And I'm pretty certain that whoever's president is going to have made a number of promises for more things they're going to do, more borrowing. So it is going to be a year where there's the potential for additions, trillions of dollars being added to the debt, just at a time where the Congressional Budget Office has been warning us we are in deep trouble right now, and we do have to change course. We're not hearing very much about how we would change course.
Maya, there are a lot of people who are listening, including probably some politicians who would shrug off the idea that spending increases and tax cuts in and of themselves will increase the deficit. They would argue there are certain tax cuts that expand the economy and that there are certain spending plans that would also expand the economy pretty significantly. Where is the truth in that, and where is the fiction?
Yeah, there are fiscal myths everywhere because wants an excuse not to have to pay for the things that they do in the budget. Because the greatest thing a politician can do, promise and give away tax cuts or spending increases without any plan for how to offset those costs. Frankly, none of it's true when it comes to policies, tax cuts, or spending increases paying for themselves. The Trump tax cuts appear to have paid for about 20% of their cost. And forward, it looks like from the estimates that are out there, it would cover even less because there have been a lot of ways workarounds within those tax cuts, and they've ended up draining more from the revenue sources than we might have anticipated. Spending side, it's probably even more difficult to offset the costs. Those aren't the only myths we hear. People saying, don't worry, print money, right? I hope that inflation is a reminder that that is a very serious misstep. And there are regularly times when people say, look, the deficit doesn't matter. But what we are seeing is that the deficit and our huge debt levels right now has led to slower economic growth, inflation, higher interest rates, not being as prepared for the next emergency, recession, or otherwise, probably at this point is a real drag and threat to our national security. So this of a weak fiscal foundation is hurting the entire rest of the country, and yet you still have politicians, that's good politics, making promises not to fix it and not to pay for the new things they want, trying to come up with fairy tales for why they shouldn't have to.
Maya, you talk about borrowing costs, and some people would say the Fed can fix that. They could just cut rates, and they can cut rates pretty dramatically to offset the deficit, and it could actually de facto decrease the deficit dramatically, at least the borrowing costs that the U.S. will have to pay. How much do you understand different yield levels as being sustainable and completely unsustainable in the near term? It's sort of a pivot point within the yield space where you say, this is going to have alarm bells.
Question, because the big question in all of this is, what is the timing of when markets would say we're not tolerating this? There be a treasury market that didn't go well? When might there be a situation where rates start to not respond? I can say we don't know the timing, of course. All we know is that the fiscal policies of this country are making monetary policy for our monetary policymakers much more challenging, because when they're trying to control the situation of inflation, we've got fiscal policymakers who are borrowing more, pushing inflation up more. The ramifications of changes in rates, if you want to control that inflation, even more threatening to our position.
Maya, this evening's debate is so interesting because it's basically two incumbents, and they're going to be asked about their record. Who is worse for the federal deficit, Trump or Biden?
Yeah, we have recently just looked at a record, what they did in terms of the borrowing that they approved they were in office. All the numbers that we look at are over the coming 10 years. And admittedly, no owns their economy or the fiscal situation. And COVID was a huge sort of unexpected that affected both presidents. But what we saw was that with COVID, President Trump added $8 $0.4 trillion to the debt over 10 years. Without COVID, it was about 4.8 trillion. That is an astronomical amount of money, particularly that so much of it was put in place when the economy was incredibly strong. So far, and President Biden's term is not over, and there's still a chance that he's going to add more to it, but he added $4.3 trillion without counting COVID, and his COVID wasn't bipartisan the way the President Trump's was. Those numbers would be $2.2 trillion. There's a huge takeaway here, and that is that neither of these presidents, when the economy was strong and needed less borrowing, not more, neither of them have heeded that warning. They both engaged in borrowing when there was no economic reason to do so, and that raises real signs for what would happen when either of them were in office in 2025, which, as we just is a huge year for fiscal policies.
The other big problem, of course, is entitlements. That's the biggest chunk of this budget and defense. When it comes to entitlements, have you heard anything from either party? They're looking at shoring this up?
I was going to say, yeah, I've heard they don't plan to fix it, which is just the biggest, frankly, pander that you could have. Both of them are trying to scare Americans that the other party would do something to harm their benefits and reassure people that they won't do anything to fix the program by calling it protecting it. To be clear, Social Security and Medicare are both insolvency. If we don't make changes in roughly a decade, there will be across the board audits for providers and retirees. This is a terrible policy. And what we need from the candidates is how they would shore up those programs, whether it's looking at retirement ages, testing, raising revenues. They're hard choices. That's what the budget is, but that's also what leadership, and we need to hear from them how they would fix entitlements. Beware of anyone promising not to touch the program, because that is what threatens seniors and all the people who are paying into the program.
Amaya, you were the perfect guest for this conversation. Thanks for being with us. Maya McGuinness there of the Committee for a Responsible Federal Budget and a Not So Responsible Federal Budget. Maya nailed it. The fact we've been doing this with unemployment south of 4% for the best part of 2 years is pretty shocking.
Especially because we haven't been tested by a recession. That ultimately is the real question. If you can't get a fiscal response to some sort of financial downturn, what happens in terms of inflation and the Fed's ability to respond?
And how difficult next year is going to be. There's going to be a debt ceiling fight immediately come January 2025. And then, as Senator Warner's calling it, it's basically tax Armageddon next year. There is going to be a massive fight, regardless who wins. There's going to be some level of these tax cuts continuing, but a massive fight about the corporate tax rate, SALT, and the likes.
If you get a blue wave or a red wave, the first place I'll be looking is the Treasury market, without a doubt. Coming up in the next hour of Bloomberg Surveillance, TPW's Jake Pawlowski, Henrietta Trey's of Aveda Partners, Deputy Assistant to the President, and Joanne Feeney of Advisors Capital Management. All of that and more from New York. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
October of 2019, you surprised the business world by stepping down as the CEO of SAP, a very, very large company whose value had more than doubled during your co-CEO position and CEO position. And you took a position with a much smaller, less known company, ServiceNow. Usually people, when they leave a job, they go to a bigger company. Why did you go to a smaller company?
Well, I saw the future and where it was going. First of all, I want to say I had a great run at SAP, and it was a pleasure taking them from 39 billion to 163 and really inspiring lots of people and customers, and it was a wonderful experience. But after 17 years, nearly 10 as CEO, I was ready to do something different. And when I saw ServiceNow in the marketplace, I knew what it was, and I knew what it could do, and I knew with my background, I was a pretty good cultural fit for what ServiceNow needed to scale it.
So let me ask you, what does ServiceNow really do? Tell me in simple English language that everybody can understand. What do they actually do?
40% of the CEOs say today, if I don't digitize my operations, my company no longer be viable in less than a decade. So we were the IT backbone for companies all over the world. How do they manage their assets, run their operations, secure their operations, all things digital having to do with IT.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to the greatest investors in the world, the people that I would like to have managing my money.
The private market in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
It's hard to get too bearish on the markets at this time. You just have to be invested.
It's not just the Mag 7, by the way, that's high quality growth. There are some really good high quality growth stocks outside of tech.
Concentrated nature of market at this point is a feature, not a bug of the AI thing.
The impact of AI and all of those things, we think it's positive for a lot of sectors.
What's a concern is everyone is now bullish, right? It's hard to find somebody who's not bullish. You haven't been penalized for being wrong.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance begins right now, live from New York City this morning. Good morning for our audience worldwide. It is debate time in the United States of America in Atlanta, Georgia at 9 p.m. Eastern Time, facing off the sitting President Joe Biden and the former President Donald Trump. This program comes to you from James Lucia of Capital Alpha. Quite a conversation an hour ago, right? Let me go through it. The outcomes, he says, a boring snooze fest, the start of a longer-term story, or a catastrophic one candidate that could decide the race.
My favorite part is he said it's probably 90 minutes of pure boredom waiting for someone to make a catastrophic error. That kind of sums up how a lot of people are going to feel about the next 5 months.
It's because everyone's going to be looking at the debate tonight for style, less so in substance. And it's so interesting. Basically, two incumbents. We know what they stand for, but people want to see their style. How does Trump come out? Is he going to be badgering Biden, which in the past didn't work for him on some debates? And does Biden come out looking robust like he did at the State of the Union? Does he come out looking tired? People are concerned about his age.
We have to talk about the timing of this repeatedly. It is coming so early in the year. It is coming before the conventions even take place. And there's a reason it's coming this early. The sitting president wanted this to happen. There are concerns about his age. There are concerns about his energy. And if you look at where some of the polls are, specifically in states, he's not doing so well and hasn't been for a long, long time. The hope is if you get engagement, that things start to turn in his favor. That's his hope. And they want to get that engagement quite early on.
And they also want to make sure those whispers about potentially could it not be a candidate Biden, that those whispers are put to death. And maybe they can do that this evening. But Jonathan, I'm glad you brought up the polls. Bruising polls for the sitting president from Quinnipiac yesterday, from the New York Times Siena. And what I found so interesting about the New York Times Siena poll was that the two vulnerabilities for both these individuals, for Trump, it's really a vulnerability. That's the conviction. People are ignoring that. But for Biden, what continues to come up about the concerns of his age at 81 years old.
All I could say is a lot of people are probably listening to this and saying blah, blah, blah. And then they're going to watch the debate purely for entertainment and then go blah, blah, blah. Is there going to be something that changes? What do you do in the markets? People don't want to make a prediction because you can't predict who's going to win and you can't predict what the outcome markets is going to be after such win.
Chris Barangi said it of Gabelli Funds in the last hour. It's really difficult this time around because it's unclear which one is going to be the best one for markets. And I'd go back to 2016. We all remember what happened then. A lot of people thought that President Trump would be bad for markets, and it turned out they were dead wrong.
What I find interesting this time around is that people have been hiding out in the big tech names, in NVIDIA, in Microsoft, in order to get sort of independent of these risks that they can't control. Regardless of the outcome, do we get a rotation out of those names as more certainty in policy comes back and people don't want to be in the most crowded areas? There are a lot of interesting aspects under the market that will potentially unravel as a result to the lack of clarity that people have on this key event.
We'll discuss some of those names a little bit later. One name in the pre-market we can discuss is Micron. Micron's down about 5.6% in the pre-market. I'm going to say disappointing high expectations, but you look at the numbers, they weren't that bad, but we've seen this movie a few times over the last few months.
Especially in the AI space, there is a fear, and Mike Wilson of Morgan Stanley highlighted it well, that there are some companies that have gotten wrapped up in the momentum that we've seen around AI that don't deserve to be. If you don't have the numbers to back up astronomic growth similar to NVIDIA, how much do names get punished? We're finding out.
That name down 5.65% in early trading. The broader market looks a little something like this. Let's start with the S&P 500. Equities coming off the back of 2 days of gains, pulling back just a little bit. We're down 0.1% on the S&P. Yields unchanged on a 10-year, 432.55. Foreign exchange just about reclaiming 107 on euro dollar, 107.03. Coming up this hour, we'll catch up with Jay Pawlowski of TPW, looking ahead to the first presidential debate. Henrietta Trays of Vader Partners on Trump will win a second term. And Deputy Assistant to the President, Amos Hochstein, on energy risk, Middle East. That conversation about 25 minutes away. Let's begin with our top story, the presidential rematch taking shape. President Joe Biden and former President Donald Trump set to debate tonight in the earliest meeting in U.S. history. Jay Pawlowski of TPW saying this: we find Trump's economic plans to be a potential disaster with a possible landing for a very overbought U.S. dollar. Thus, we look forward to the debate where this will presumably be surfaced. Jay joins us now for more. Jay, it's fantastic to catch with you, sir. This is a very, very different view on the US dollar to the view we had from Alan Ruskin about 20 minutes ago. Let's start the conversation like this. I'll share that quote from Deutsche Bank with you, and you tell us why you think about this a little bit differently. The dollar's going to remain stronger for longer. They say this about euro dollar. In a low for long pattern below 1 for the next 2 years, the 2025 euro dollar forecast highly dependent on the US election and the extent an aggressive protectionist trade policy is pursued. If this is the case, we would like to revise our euro-dollar forecast closer to parity. They think some of the trade dimensions, Jay, that maybe you're kind of alluding to actually produce a stronger US dollar and not a weaker one. Jay, why do you have a different view?
Yeah, John, well, that's what makes a market for sure. And there's definitely different views on this. And we do have a distinct counter-consensus point of view here. And it's actually interesting, because we think Biden is going to win in a landslide, and that's been our view since the start of the year. But we also hold the contrary thought that if Trump wins, it could be a catalyst for a dollar crash. And so let's start with the dollar. The dollar has been in a trading range, to Marty Pring, who's one of the top technicians, for 18 months. That suggests that it's going to break out at some point, and it's going to have a big move. If it breaks lower, as we think, from 105 today on DXY, it could go to 95 or below very quickly. That's 10% down. Why is that likely to happen? We had 16 Nobel laureates put a letter together outlining the problem with Trump's economic policy as it is. It's highly inflationary. It's anti-growth. It is likely to lead to stagflation. It could create a period where the Fed is in confusion because the Fed cuts in September, let's say, as the markets expect, and then Trump is elected. Markets fear inflation. He's going to continue the tax cuts. He's going to impose massive tariffs, both significantly inflationary, and so the market forces rates higher, to your earlier discussion. The Fed, therefore, looks like it may have to act. So you could have confusion in the markets. At the same time, the dollar is it's the most over-owned asset in the world. Foreign ownership of U.S. financial assets is at an all-time high. So the rest of the world is in recovery. Europe is in recovery. Asia is in recovery. and therefore the opportunities to take profits in the dollar and to go elsewhere, it would be extremely compelling. And so we simply look at it like this. Trump has made his views clear. Nobel laureates know way more than I do, have made their views clear. It's a contrast between that outlook and a Biden second term, which all the concerns about Biden's age, he has had a masterful policy response. The U.S. growth coming out of COVID is by far the best in the world of any developed economy with lower inflation. So the policy mix, forget the age,
right?
The policy mix of the Biden administration has been fantastic.
Well, Jay, I want to jump in here because aside from political prognostication, there is a pretty big call here. How much conviction do you have in it? Are you basically avoiding U.S. assets entirely and shifting to where instead?
Yeah, no, obviously you you can talk a game, but you have to invest in a certain way. So we own U.S. assets. We are, we run a global macro model, so it's stocks, bonds, commodities. We are overweight equities, overweight commodities, significantly underweight fixed income, completely out of U.S. Treasuries. And we have views, for example, in emerging market local currency debt, which are, anti-dollar, obviously, and that hurt us this year. That position's down, 5% year to date. But so we are, I would say, overweight non-U.S. assets. Remember, the U.S., my earlier point, represents like 62% of ACWI, All Country World Index. That's a record high. So, we're, let's say, 50% U.S. in our position. We're probably a little bit less than that. So that's an underweight, but it's still a big position.
Jay, if I could just go back to what you're looking at potentially after November 5th, it's not just that you think Biden's going to win. You think it's going to be a blue sweep. What gives you that conviction, especially when many people are talking about how it's going to be very difficult for Democrats to control the Senate?
Yeah, no, that's exactly right. And again, we have a point of view and a distinct point of view, and we think you can support it by looking at things like every swing state, the Democratic candidate for Senate is running ahead of the Republican candidate. In every race of the last couple of years, virtually every race, Democrats have done significantly better than forecast, better than the polling pre-race would suggest. So there's a level of success that Democrats have had running office across the country over the last several years that would support the idea of much more enthusiasm than people think. In addition, there are things like abortion on the ballots in states that we think are going to drive Democrat turnout to a significant level that is not being captured adequately. So the House is in play. Senate, every close race, swing state race in the Senate is leaning Democratic at the Senate level, and we think that the issues around Biden versus Trump are going to break for Biden, as arguably they are already doing, in a sense that if you look at polling a couple months ago versus today, Biden is doing better. And granted, polling now is not indicative; it's too early. But I think tonight's debate is going to be very interesting, as everyone on the panel here has pointed out.
I just want to finish on fixed income. So talked about your market calls. How do you think bonds would respond to the outcome you're looking for?
Which one?
Treasury specifically, Jay. Treasury specifically. No, I just want to understand, get that blue wave. How does the Treasury market respond to that?
Well, I think President Biden's policies on the fiscal side are much more in line with kind of controlling the deficit, right? He's not going to extend the tax cuts. Anne-Marie was saying earlier, 25 is a huge year because of the Trump tax cuts either have to be extended or reversed. Biden will reverse them. Trump is going to extend them. So I would think that the market on the fixed income side in a Biden win, depending on where the economy is at that point, it's kind of hard to say, right? Economy is going to drive it. I think probably either backs up the bond market a little bit. If Trump wins, it's going to be, I believe, a significant backup in yields, which craters the economy. And as I said, could potentially put the Fed in a box, creating significant uncertainty around the currency and the dollar breaks lower and it gathers steam, and you have a dollar that's crashing, I think, versus talking about the yen at 160. Yen fair value is 100. It's at 160. It can go to 140 very, very easily.
Very, very different view to Alan Ruskin at Deutsche Bank from 30 minutes ago. As you say, Jay, that's what it takes to make a market. Can I just say, Jay, we've got a presidential advisor in the green room. He might be reaching out, looking to hire you. Jay Pawlowski at TPW.
I'm available.
Jay, thank you. Amos Hoxton coming up in about 15 minutes' time. I imagine if Amos is watching this in the green room right now, he probably likes what he heard, right?
Absolutely. A blue wave, better for the economy, better for the market. He's definitely, the White House, I think, maybe
some of that stuff is pretty contrarian. Let's just put it this way. Not the stuff on President Trump, if he gets a second term, what he would do, what it would mean for inflation. I think that's fairly consensus in the economics community. But just this idea that you get a blue wave and it's constructive for fixed income, for treasuries, I think a lot of people right now, the consensus view is blue wave or red wave, that treasury market sounds come November.
And you have different views on who would be worse potentially for the treasury market, depending on expectations for spending, et cetera. There also are very countering views on who has conviction to win. You have him saying, absolutely, it's going to be a blue sweep. And then you have Steve Eisman coming on and saying 200% chance that Donald Trump is going to get reelected.
One thing I will say, it's really hard to have conviction right now. So bless these people who do. When we have so many months left ahead of us and a black swan event could happen, a number of events. But also, Jay is talking about how Biden is doing better in the polls. He just had 2 bruising polls. And one of them, although he's saying that abortion is going to be a big issue and they're trying to campaign on this, the economy and inflation remain number one. Also, even some Democratic voters are starting to say immigration is a top concern. And when you look at those 2 issues, on the whole, they trust Trump more than Biden on it. So if they're going to go out on the number 1 or number 2 issues, it's lining up behind Trump's favor.
We've got months and months of scenario analysis ahead of us. This is only the beginning. The debate starts a little bit later. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. SoftBank's Vision 2 fund is investing in Perplexity AI. It's giving it a $3 billion valuation. The deal is Masayoshi Son's latest a sector that he deems crucial to securing his legacy. Perplexity is a U.S. and it's trying to distinguish itself from the other AI chatbots by providing more real-time information. Amazon, meanwhile, is launching an online storefront for low-priced apparel and home goods. The company plans to start shipping goods directly to consumers from China. Amazon has sought to hold its ground with the promise of speeding shipping. It previously encouraged Chinese merchants to use logistics services that merchandise at U.S.-based warehouses. This is Amazon's biggest move to date to counter the rise of discount upstarts like Temu and Shein. Elon Musk's SpaceX will sell insider shares in a offer at a higher than expected price. The shares will be sold for $112 a piece. That value is at close to $210 billion. That's also up $30 billion from when they last got a valuation in December. A source says the jump in value is due to significant investor demand. The valuation is a new record for an American private company. And that's your Bloomberg Brief, John.
Danny, thank you. We'll check in with Danny again in about 30 minutes. Up next on the program, the rematch begins.
Everybody knows he's a liar.
But you
I just want to make sure.
Joe, you're the liar.
Take a look at what he's actually done. He's done very little.
You could never have done the job that we did. You don't have it in your blood.
We handed him a booming economy. He blew it.
That conversation up next, live from New York City this morning. Good morning.
DOJ or other authorities.
Could face
Listens next.
It was going to keep winning World Cup. This is a 3
as the economic
the intersections of Hollywood, Silicon Valley, and beyond.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Live from New York City, welcome to the program. Equity futures down 0.2% on the S&P 500. A bigger mover in the pre-market for you. Walgreens has a new range for the year for full-year EPS, 280 to 295. Previous range, 320 to 335. They've slashed the outlook. Elisa, this is a tough retail environment. There's a report out there too that they're going to close stores.
Yeah, thousands of stores potentially. This was reported by the Wall Street Journal. They interviewed CEO of Walgreens, Tim Wentworth, who said 75% of our stores drive 100% of our profitability today. What that means is others will have to take a hard look at. He also went on to say that they face a difficult operating environment, including persistent pressures on the U.S. consumer. To me, I wonder how much that's the story. How much this is a story of some of those plastic containers that you walk into and you have to get someone to come and
unlock the toothpaste.
I'm serious. I think that doesn't that sort of hamper your desire to go into a drugstore to buy your basic goods?
Yeah, it's not exactly the nicest experience, is it? You want to pop in, you've got to call an assistant, you want to unlock the toothpaste.
Yeah, and then you have to stand there waiting with other people who are frustrated, who want to be served first. They come after a while, then you get your one thing, and then if you want something else, you don't go.
This has been going on for a while. Their stock is down by a little more than 5%. More consumer later, 8:30 Eastern time, so 1 hour and about 10 minutes away. We'll get new data on jobless claims. Look out for that. Under surveillance this morning, the rematch begins.
Everybody knows he's a liar.
But you
just want to make sure.
Joe, you're the liar.
Take a look at what he's actually done. He's done very little.
You could never have done the job that we did. You don't have it in your blood.
I don't understand why this president is unwilling to take on Putin.
There has been nobody tougher to Russia. Between the sanctions, nobody tougher than me on Russia.
He talks about the art of the deal. China's perfected the art of the steal. We have a higher deficit with China now than we did before.
We built the greatest economy in history.
We handed him a booming economy. He blew it.
We've done this before, and we're about to do it again. President Biden and Donald Trump returning to the debate stage for the first time in 4 years. Tonight at 9 p.m. Eastern on CNN. The candidates agreeing to shake up the rules this time around with no audience, no notes, and microphones muted after their turns are over. Henrietta Trays of Veda Partners joins us now for more. Henrietta, what are you looking for out of this very early debate in 2024?
At this point, I'm hoping that people will genuinely watch it and it won't just be sort of a clip that goes live on TikTok. Although I suspect that the people who are going to be swayed by this, according to the latest data from Morning Consult last night, are actually the ones that are younger voters, specifically Black voters, Hispanic voters, who are saying, I'm going to watch this debate just to find out who I'm going to vote for. They're the largest undecided basket right now. And my attention is on how they feel after the election, the hour after, as clips go viral, if they do.
Henry, YouGov had similar polling. 1 in 5 voters planning to watch actually watching to decide who they're going to vote for, and they're younger. So what does each candidate need to say to Gen Zs out there?
That's the only question that I think really matters, Anne-Marie. Undecided voters right now are going to decide this election. Polls are off by about 9 points versus where they'll land in November. That doesn't mean they're wrong. It means that the polls are telling you about a big basket of undecideds and third-party voters who are not going to stay there. Those are disproportionately female voters, plus 17 for Biden right now, and they are double the number of undecided male voters out of the ether. They are disproportionately younger voters. They are Black voters and Hispanic voters, and they are education voters. And these are folks who are going to be deciding based off of what happens tonight and into September. The biggest issue that Biden has is his age with this demographic. So him performing tonight, the way that he did at the State of the Union, could have a material impact on the polling data in the next few weeks. the people who get off the shelf and decide how they're going to vote are predisposed to be in the Democratic basket. That's spend our time and what we concentrate on with our clients.
Well, the last 24 hours, we had a poll from Quinnipiac, we had a New York Times Siena poll. Biden is down in both of them, but you've done a lot of data about how the polling is off, how much. What are you inferring from these latest polling numbers?
Well, I think an outlier poll the New York Times write-up itself suggests is really important to watch, but also important to put in context. It's not good news for Biden. Indeed, there really hasn't been much in the way of good news for Biden, except for the fact that Trump remains at his ceiling. His supporters are locked in and will not be deviating. It's Biden, though, since November of last year, who's been on the slow uptick, and that's from a whole bunch of things. Democrats coming home to Biden, believing that he be the nominee. I spend a lot of time with clients talking about who would replace Biden on the ticket. I mean, really smart people in every single meeting. You really can't avoid it. So any indication Biden can do tonight to dispel the narrative that is being spewed by the Republican Party that he's not able to do the job for the next 4 years, I think would go a really long way, because that's where the resistance is. We were talking about immigration before. I mean, immigration's down 40% just since the president enacted his executive 3 weeks ago. That's lower than it was when he took office. So the issue that Republicans had a lot of salience around of immigration has been muted with the electorate and is now on par with abortion. You're going to go onto a debate stage in an environment like this where the Gen Z vote is the one that perhaps you should talk about abortion all day, every day.
Are we going to hear anything, Henrietta, about policy? I mean, is that really going to be even relevant to this debate?
I sincerely doubt it. I really would be surprised. Sure, there'll be conversations about things like the economy. There'll be taglines. President Biden has a plan for extending most of the 2017 tax cuts. President Trump has a plan that would extend all of them. The cost is $4.6 trillion. They're going to sort of the ugly parts and talk about how they're going to provide tax cuts for the middle class, or in Trump's case, classes. And I think that's probably the most extent you'll get out of real policy discussion.
There's one I have tons of conviction about later on this evening, 9 p.m. Eastern Time. Bramo's not watching. Henrietta Trey's Available Partners. Henrietta, thank you. Lisa's not tuning in for this. Jay Pawlowski will be. Jay just wrote in. Just wanted to clarify something quickly. He said he thought rates would back up in either scenario, but much more on a Trump win. Much more on a Trump win versus, say, a Biden win. But ultimately shares the view, blue sweep, red sweep, you're going to see it off in the Treasury market.
Which is the reason why he's entirely out of the Treasury market and going into other non-U.S. assets at the same time that he's not completely exiting certain trades in the U.S.
This conversation is going to continue. In just a moment, we'll catch up with the Deputy Assistant to the President. We'll speak to Amos Hochstein on in the Middle East and the risk to the energy market. That conversation just around the corner. Live from New York. This is Bloomberg.
the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time. Hosts Joe Matthew and Keely Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
It's going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today, job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Equities negative here by 0.2% on the S&P 500. On the Nasdaq, a little bit as well. We're down by 0.2. Similar move on a Russell. Plenty of movers out there. We've talked about Micron already this morning. That is down by about 6% in the pre-market. Lots of talk in the last 30 minutes as well about Walgreens. Softer story there. That stock is down in early trading. Lisa, we're down by more than 10% in pre-market.
Wall Street Journal reporting that Walgreens plans to close a significant share of its 8,600 stores. United States. This comes after it already announced last year a turnaround plan. They came out with a much lower than expected forecast range for full year adjusted earnings. And they said we continue to face a difficult operating environment, including persistent pressures on the U.S. consumer and the impact of recent market dynamics, which have eroded pharmacy margins. Also, I'm wondering how much some of the anti-theft measures have made it difficult for people to want to go.
Yeah, I was going to say, when they talk about specific dynamics, they just talk about theft.
Well, I mean, it's not just the theft itself, too, right? It's not just that idea, but also the fact that the experience of going into these stores and you see the plastic covers and you've got to get someone to come over and unlock it. Why not just order on Amazon?
Down by more than 11% in the pre-market right now. Is this just about Walgreens or is this really just about the US consumer? We'll get more data on the US consumer later. 1 hour away, jobless claims. Under surveillance this morning, top story for you, the CNN presidential debate starting at 9 p.m. Eastern tonight. It will be the earliest US presidential debate in history. President Joe Biden and former President Donald Trump facing off without studio audience, and microphones will be muted unless it is the candidate's turn to speak. Elsewhere, country's biggest banks passing the Federal Reserve stress test. Investors hoping the results will pave the way for higher dividends, stock buybacks, each firm staying above minimum capital requirements during a hypothetical recession. Interesting sort of takeaway from JP Morgan. Did you see that response? Basically saying that our expectations weren't as great as yours.
That basically it was less stringent what they did than their own stress test, basically posturing. It was a bit of chest pounding. Saying, you wanted to stress us, we stress ourselves even more, so take that, regulators.
Yeah, I'm not sure what that actually says about the regulators and the stress test to begin with, but okay. That's the latest on that front. Here's the latest on this one. Israel's Prime Minister Benjamin Netanyahu warning the country's military may shift its attention to Hezbollah in Lebanon, risking a wider conflict in the region. US officials maintaining ironclad support for Israel while looking to de-escalate tensions in an area crucial for trade and energy supplies. The Deputy Assistant to the President, Amos Hochstein, joined around a table here in New York. Amos, good morning to you. It's great to see you.
Good to see you too.
I know you have the president's ear. You've been a key voice in the Middle East conflict as well, particularly through the Gaza Strip, and now it involves Lebanon. And I know you've been part of those discussions too. Can we start there? How connected are the two issues, the tension we see in Gaza and the tension potentially on the horizon with Lebanon?
Well, first, thank you for having me. It's great to be back. Look, on October 7th, after the horrific attack by Hamas, Hezbollah decided to enter the conflict on October 8th at night with an attack on Israel responded, and we've been in this low to mid-range conflict ever since of a back and forth of attacks between rocket attacks. It has resulted in a significant amount of Israelis being essentially evacuated from their homes in the north, not being able to go back to because of the fire from Hezbollah, and a equal number of Lebanese who are evacuated from their homes in South Lebanon. So this has been a terrible low-range conflict, and while the attention has been in Gaza for very good reason, this has been on a simmer. So clearly, we have been trying to work hard with both parties to keep it at that level from escalating to a sort of larger conflict and a more intense conflict. We've been able to do that with some escalation periods and then bringing it back down a little bit. We're going to continue to try to do two things. One is to de-escalate the current conditions and then find a solution that will enable people to go back to their homes. That's the charge.
What do you think that solution looks like? What are both sides asking for?
Well, at the end of the day, we have to get Hezbollah away from the border because the status quo of October 6th is not possible anymore. So we have to take, there are a number of measures that we've been discussing with both sides that can be taken by both sides in order to be able to come back. I can't go into the details of what that would look like, but I do believe that it is possible. Now, Hezbollah has said that they're attaching their actions to what happens in Gaza. We understand that. That's the reality. And we have to work within those parameters to see what we can do as things shift. And of course, we are working very hard. The president has been working nonstop to try to get a ceasefire that allows all the hostages to come home and that would practically end this war in Gaza. That, of course, would make things a lot easier to reach a settlement. But it's not an automatic. It's not you get a ceasefire in Gaza and you get a ceasefire in Lebanon. It doesn't work that way. We have to have one solution in Lebanon, but it is enabled considerably by a ceasefire in Gaza.
When it comes to Lebanon, the concern everyone has is what this means for the wider region, more so than what's happening in Gaza. Lloyd Austin yesterday, the defense secretary, said it could easily become a regional war with terrible consequences for the Middle East. Is that something this administration is really worried about, a regional war?
Well, I think we are worried and concerned about any escalation of violence between Israel and Lebanon, and these are conflicts that they start and you don't know how they end. The most important piece right now is the effort to get the hostages back from Gaza and a ceasefire that ends the conflict over time. That is how we prevent both the current conditions and the escalation that you're referring to.
A big vulnerability for a wider regional conflict is, of course, the Red Sea. This morning, there's reports that a ship traveling through the Red Sea was attacked by Houthis. When you look at, you have this big portfolio of not just what's going on national security-wise in the Middle East, but the energy market. How concerned are you about a spike in energy prices because of what we're seeing in the Gulf?
Well, look, I think the Houthis, who are a proxy of Iran, have been attacking the international commercial fleets. They are not there. There's really no apparent reason why we're accepting the fact that the Houthis, backed by Iran, can fire missiles into the Red Sea and affecting global shipping rates, global shipping routes, and the availability of ships themselves. So that is something that we are going to continue to do what we can to bring a stop to that. As far as the energy markets, look, I think that clearly the Middle East is one of the most important energy regions, and we have to make sure that there is a free supply of energy. That has been done. There are other routes that can avoid the Red Sea, and clearly we've seen a supply non-disrupted, even if it ticks up the price of shipping rates a little bit by the fact that they have to go a longer route. But by and large, that has not affected the energy markets.
There's one story as well circulating about, you mentioned Iran, about sanctions when it comes to this administration. Rough they're being on their adversaries when it comes to energy sanctions. Many people will say there's sanctions on the books, but they're not always enforced. And there seems to be some tension between the White House and people at OFAC who are enforcing those sanctions. How, because it's an election year, this is some of the reporting the Wall Street Journal has, because it's an election year, the administration is not going to be as tough on, say, Russia or Iran because they want to keep prices low. Would you say that's accurate?
No, that is completely false. Look, we have been as tough as can be on both Russia, Iran, when it comes to a broad range of sanctions, not just energy sanctions, but including energy. Now, when you do energy sanctions, or any sanctions for that matter, you got to be smart about it. You want to do sanctions. When you do the sanctions, you want to make sure that the bad actor is the one that is affected. So if you do the kind of sanctions that cause a major spike in price, What does that do? It just increases the revenues to the regime that you're trying to affect. So this is not about putting down a hammer. You got to do this in a smart way that reduces their revenues. That's the ultimate goal here, is to reduce their revenues. Now, is there an alignment between the fact that we would like to see domestically in the United States lower prices? The president has said many times he'd like to see lower gasoline prices for consumers at home, at the pump, so we want to prevent a spike in energy prices. But there's a total alignment between what we want on the domestic side to reduce prices, which we have done. Gasoline prices are down about 20 cents in the last couple of months, and our national security goals, because when prices rise, they don't only affect American consumers, they also increase revenues to the bad regimes we're trying to affect.
So you talk about gasoline prices. Right now I'm looking at just under $3.50 a gallon on an average basis around the United States. It's down from a high of more than $5 back in June of 2022, and the average over the past 5 years north of $3. So is this an appropriate price where it is right now?
No, we'd like to see it significantly lower than this, but we have a growing economy. We have a conflict in Russia. We have a conflict in the Middle East. And that's why the president has pursued a policy of doing two things at the same time. One is to make sure that we have enough production in the United States and that the energy markets are supplied. Second is to accelerate the energy transition. And we've done both. The passage of the IRA, the Build Act, the CHIPS Act is all about investing into the future. But he recognizes that you can't do that as a flip of a switch. And that's why, look, the United States today is at the highest level of energy production that we've ever had. So he has done everything he can to make sure that we are at maximum supplies to reduce prices and inflation, while making sure we have a pathway to not having dependence on oil producers either at home or from adversarial countries.
How much will the Strategic Petroleum Reserve act as a buffer, potentially, with additional releases in the next couple of months in response to prices not going down on their own?
Well, look, I think the SPR is a critical tool for the United States. We've used it over the decades to address emergencies and conflicts and natural disasters. The president had an unprecedented use of the SPR, release of over 180 million barrels because of the Russian conflict, when prices soared to $120 a barrel and $5 of gasoline, as you said. And we will continue to use any tools we have if there is a need for it. We are going into hurricane season. We have conflicts around the world. We have to make sure we have that tool. Since releasing SPR, the Department of Energy has been buying back. And as a reminder for this show, for our audience of Bloomberg, we sold at about $95. We sold 180 million barrels at about $95. We're buying it back at about 77, 78. That's a really damn good trade.
So you're a good trader for the West Wing, noted. But it's not just the $5 a gallon when the SPR came into effect. The first time the Biden administration tapped the SPR was November 23rd, 2021, and gasoline was at $3.39. Today it's at $3.50. So why not tap it today?
Well, we were at that point in time, first of all, it was a very small release. And it was coordinated together with our European allies, European and Asian allies. It was a global action that we took, and that was around the run-up for this war. I mean, forget that the president of the United States saw this war coming in Russia and called it in advance. So it's about the surrounding environment of what is happening in the markets, what's generating the increase in price. We would like to see the prices go down. We've called on the oil companies to address that. They're producing more than they ever have, both in the United States and around the world, and I think they can do a little bit more to make sure that Americans are not suffering at the pump, and that the effects on inflation are reduced.
Can I just say you haven't closed that trade yet? You've got to refill the SPR first.
Well, we are refilling.
You're like doing it, but haven't done it. Where are we now relative to where we were? It's quite a gap, isn't it?
I disagree. We've purchased back about 40 million barrels. We were required by Congress to sell 140 million, which we worked with Congress to cancel that sale. So net, we are basically back to where we would have been had we not sold from the SPR. So, but we take that point. We have enough in the SPR to address concerns that we may face in the future. That is something that every American should know. We have enough to address any security or natural disaster. We will continue to buy those barrels back to the SPR because the president believes that it's an important tool.
You said we're doing two things simultaneously. You said one is we're making sure we're fully supplied when it comes to energy. Two is to accelerate the transition. I'd argue you're doing three. You're also putting up the walls to China and Chinese EVs. Can you help me square that circle? Why shouldn't American consumers be able to buy cheap Chinese EVs and to ensure they can do the kind of things that you're talking about doing anyway?
Well, what we want to make sure is that we have energy security and economic security. And so those are always challenges that you have to look at. We'd like to see a lot of lower prices. We put sanctions on Russia and Iran because that's the right national security call. The way that the Chinese have acted in the market, it is not a free market. And we have to make sure that we are securing the American economy for the future. And if you allow somebody to come into your market, flood it with below cost products, then ultimately you'll lose your economy. And we've seen it with product after product. And I think people who watch this show who care about financial markets should be very worried about that and look around the world. Every place they've gone in, they've done the same thing. They dump on the market. They eliminate the local competition and the local markets. Look what happened in the solar industry 50 years ago. And then they dominate. And those prices are not going to stay low forever, just until they kick you out. And then they're going to raise those prices. So if you want to have a strong American economy, we have to take the kind of strong action the president has been taking.
There is, though, a conflict here. And to John's point, if people could get much cheaper electric vehicles, the transition might happen faster. That the fact that they are more expensive and that it might be a slower transition. How much more do you expect the United States to depend on fossil fuels? How much longer as a result to prolong the transition in the name of national security?
It's not just about security. I don't want to have a boom in EVs that is also on the backs of slave labor, child labor, coal power plants that are energizing a EV car manufacturing. We want to have a transition to a green economy, a clean economy that actually has the standards and values of the United States. There's a living wage that workers should have. Hiring children and certain minority communities just because you can and pay them nothing and then say, I have a cheap product. That's not what we're going to build the clean energy economy on. I think the innovation is in the United States. We have the workers and the skills in the United States, and we should build as much as we can. And the fact is that our partners agree. If you look at what we're discussing in the G7, that is what everybody wants. They want to be able to have a clean economy that is competitive, and that we should have this around the world. Countries should have their own manufacturing bases, but they should be done based on a free economy. What the Chinese are doing is not a free economy. It is based on loans, 0% loans from the central bank that says, and we have company CEOs coming out, whether it's in chips, AI, or in EVs, who say, I don't plan to make a profit for 7 years. Well, you don't take a genius to say, here's a wad of cash, go build a business, don't worry about a return. I think what you discuss around this table every day is getting returns. That's not a free market. So yes, we want to have a clean energy economy. We're going to accelerate it by doing it in a fair way that produces more jobs. And look, manufacturing is back in America. And that's because we have these infusion of the laws that we passed, the IRA, the Inflation Reduction Act, as well as the BUILD Act and the CHIP. That is how you do it, making it competitive and better.
It's been too long. Need to do this again soon.
Anytime.
It's good to see you. Thank you, sir. Amos Hochstein there, the Deputy Assistant to the President. Equity futures right now just about unchanged, but there's a big story in the pre-market. It's Walgreens. We're down by close to 15%. Let's get you some of the stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Yeah, so 14.5% for the drop in Walgreens this morning, John. The company lowered its earning outlook for the rest of the year, and doing so pointed to worse than expected consumer environment. It also plans to close more stores in the U.S. According to the Journal, Walgreens is reviewing a quarter of its stores that aren't profitable and could shut a, quote, meaningful percent of them in the next few years. On the other side of things, Amazon has joined an elite group of companies. The tech giant has reached a $2 trillion market valuation for the first time in trading yesterday. The AI rally has pushed the company deeper into record territory. Even so, Goldman data out this suggests that hedge funds are selling tech aggressively. June's net selling of the sector is on track to be the largest record, with the bank's data going back to 2017. Now, another Boeing whistleblower has come forward. It's a subcontractor mechanic who worked on the 787 Dreamliner and claims that he was retaliated against for raising concerns about work that he saw on the plane. According to a statement through attorneys, the whistleblower said that he saw, quote, substandard manufacturing and maintenance practices on a crucial part of its nose for maintaining cabin pressure. Boeing responded saying the claims were reported and investigated, and it is not involved in the personnel decisions of subcontractors. And that's your brief, John.
Danny, thank you. Next on the program, looking beyond big tech.
Because of maybe the AI narrative in particular, we've seen people perceive certain boats as lifeboats when in fact they got holes in them. The boat tilting back and forth. If people are running to different sides of the boat can actually remain fairly stable.
I think I understood that from Mike Wilson and Morgan Stanley.
You can explain it for the next 5
minutes.
minutes.
Guys yesterday.
Yeah.
You can explain the commercial break to me. All right, that's next on the program. You're watching Bloomberg Surveillance.
Do you think it'll be the case where someday you'll be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, it's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade, weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m. only on Bloomberg Television. Context changes everything.